The first element is market direction, recognizing the trend. You always want to be on the right side of the trend. If the market is going up, buy stocks long. If the market is going short, sell short or be in cash. And the S&P market signal actually is three-phase, so you have the chance of being long, short, or in cash with a three-phase signal. The second element is the security selection, and that is which stocks to buy. You want to buy stocks that are showing strength in phase with the trend, and we help you do that. The third element is risk management, and of course only you can determine what is risk capital, but we help you by giving you an exit strategy for the stocks that is compatible with those stocks based on the back testing that we've done. We're not saying that we're predicting the market direction. We are just recognizing which direction the market is already going. And that's what market timing is as we define it, or a market signal. The reason why it's important is that because you might think if you have a really good stock selection program that you can find stocks that are going up when the market is going down. Actually, that's very hard to do because 3 out of 4 stocks follow the trend. It's a pretty well-recognized principle, and we've found that as well. And the key thing in stock market investing is to know which direction the market's going. It's not as easy as you might think. If you have ever listened to the stock market report on the radio or the television, you'll see the market going up and the market going down one day the next, and you know, you might get a few days in a row that are the same, but often it's up, down, and it's pretty hard to tell which way you're going unless you do a mathematical analysis of the thing. And that's what we've done. There's a number of ways to do this, but our method is fairly sophisticated and has a lot of factors built into it. We look at price and volume of some key indexes like the NASDAQ Composite, which has over 3,000 different stocks or securities in it. So we're confident that our analysis enables investors to recognize the beginning stages of a trend that is likely to be sustained. Won't always be sustained, but often it is. S&P market signal is custom designed, of course, and there are faster signals and maybe some slower signals, and definitely ones that lag the market more. What we did was purposely design in that the signal changes would only occur at the end of the week, and some people who might be used to a faster signal might think that that would cause us to miss some moves, but actually it doesn't, because the market has a rhythm to it, and it does have a weekly rhythm, and some rhythms that are a bit longer than a week, such as monthly rhythms, and we take advantage of that in the S2P market signal model. Other signals can be prone to whipsaws. Of course, S2P market signal itself isn't immune from whipsaws. Whipsaw is when your signal changes, but then the market quickly reverses and you find yourself in the wrong direction of the market. Some of the faster signals are more prone to that because the market does have quite a bit of volatility in it from time to time. Some commonly used signals are based on moving averages, exponential moving averages that can be basically, if you use a moving average, you're saying that the market is going to respond to a certain rhythm, the length of the moving average you're looking at. But that isn't always true. The market is pretty unpredictable. So the S2P market signal model is very dynamic, and it will adjust its look-back period to what's happening in the market at the time, which allows even a weekly signal to be very responsive. The S2P market signal, because it does look at the market as a whole, it has a broad usage potential. You could use the S2P market signal in purchasing futures contracts. If you would choose to hold 1 or 2 futures contracts overnight on the NASDAQ when we have a trend change, that could prove very useful and profitable for you. And one of the reasons that we use stock selections is we've been able to test and back test that because of the stock program that we use, having the data in it to go back. But in the future, we will be looking, S2P Market Signal will be looking at other possible investment vehicles such as options and futures contracts. But that's something that those with experience in those areas might want to consider doing right away.